This conference will now be recorded.
Welcome to this edition of Traders Exchange. As always, everything that we're going to be talking about today is for educational purposes only, and nothing is intended as any type of investment advice. So the reason, instead of kind of running out of here today, I want to we have a little bit of a backlog of questions. We definitely are going to need some more next week, but I want to make sure that we bang out the rest of these so that we can kind of, get fresh, because sometimes I understand, if you ask a question and it's 2 weeks later, it doesn't hit as home as much. I want to get that backlog fixed, and then we'll be starting fresh next week. So let's get started. First question. So, hey, Rich, lately I've been having issues managing my trades in everyday stocks as things have been slow. I'll either overmanage or give back a lot of profit. I'll be up in a trade where it's clearly a winner but has not hit my price target yet, and I have to make a difficult decision of whether to trust my trade or start taking off exposure prematurely because I don't want it to become a loser for no reason. Should I be just be setting even more conservative price targets and simply expecting to make less when things are slow and not view it as over managing? Okay, so this is one of those things that I'm going to have to give you examples of. I'm going to give you examples of things that happened today, because managing a trade, each trade is going to be different. One of the things that we have to realize, and this is really where the foundation of management comes from, is that based off of what we see. So we're following somebody going into a trade, whether it's going to be a building trade, which is technically going against what they're showing us, or if it's going to be a trade towards the print. So we have to understand that based off of what they're doing and what they're showing us, that's really where the management comes from. Because, I could be in a stock like DWAC, and I know that, let's say maybe it has, let's just call it 65. Okay, so let's say we know that the stock needs to go above that 65 level. Now, if I come to 64, let's say 25, even though I know that I have the extra 75 cents there, I have to manage it based off what the stock is showing me. So when we look at a stock like DWAC, and I know a lot of you want to go over a bunch of these stocks, and we're gonna use this personality because this is a specific personality type that we're going to see in a stock. So let's start there. What does its personality tell us? Now, we've been going on now since 9:30. It is now noon, so we have a lot of information there. So what are some of the things that this stock tells us? Forget about our prints. Forget about it. Let's talk about personality. And this is going to be a little bit of an intro into the classes that we're going to be doing in the next week and the following week after that. But what does it tell us? What do we see here? So it follows the rules. It does. Okay. Essentially, is it kind of an exception, though? Guys, I'm having to mute your mics. If we look at the actual stock itself, isn't it an exception today? And the answer is yes, because if we look at the amount of volume is going to get there to show us that, it's above. But even though it's an exception based off of its range, based off the way it's trading, it's still following its rules. So an exception, just because it's doing a lot more today, it doesn't change that we're still going to be following what what it's telling us to do. So let's get a little bit more specific within this. Okay, let's get a little bit more specific. What else is it telling us? Okay, and there's one thing that jumps out at me that I have to be aware of at all times, because it's basically the key to trading. If it wants to, can it move down $3 instantaneously? Snap of your fingers. All of a sudden, you can get crushed in it. So what does that tell me about my trading? How much do I want to keep into this as the stock is moving? So I have to be more conservative. So it's not necessary that I have to be on defense at all times, but I do have to understand that my entry is so important and that it's just so easy for it to come back $1 on me. So I could be up 80 cents and then be down $1.20 in 2 seconds. So these are the things, this is the type of personality that I have to understand. So when I understand what's the key to trading, the key to being a successful trader, And this is never going to change. I don't care what methodology you use. Exactly. It's going to be cutting your losers. So a stock like this, can I get into it unless it looks perfect? And the perfect example here, is, when we were talking about it before, is that it didn't pull back based off of how many prints it showed at 63 on that ask side of things. It didn't pull back the amount that we would have liked it to the amount we would have liked it to pull back. So we're talking about, a 30-cent move to the downside and then a trigger back towards that upside. I can't take this because it's just so easy for this thing to just shake me out immediately. When I say shake me out, I mean, if you look over here, even within 2 minutes, you're going from 63 down to, 60.50. You'd be shooting from the head, and that's really what it comes down to. So managing a trade like this is going to be a lot different. But now let's talk about to the downside aspect of things, okay? If I'm looking at this personality, what does it tell me about the time that it takes for the stock to actually come to fruition from the prints that it shows us? Builds pretty quickly, and which is interesting because the orders are very thin and we don't get a lot of prints that come in, but it's still, that's what it's showing us. It's showing us that the amount of volume in it, because of how thin the orders, and this is where everything becomes relative, because it doesn't look like it's got a high amount of volume to be able to build quickly, but when the orders are that thin, to be able to take out the amount of orders that are available, it's not a hard thing to do, because there's just not a lot of them that are actually there. So now we're going to talk about, based off a personality like this, am I going to be looking to make extended moves? What I mean by an extended move is that, if we have the prints from 58 that show us it could go to 65, am I going to be looking for the move to 65 based off the way that I'm going to be trading this? I'm not going to. And the reason because of that is because it's so easy to get a little bit of a run, but then again, you get that bar that comes back down and ends up killing you. So I want to talk about a number one trade for a second. So we got beautiful ask prints that came in at 63. It never really pulled back, and it started coming and, pushing towards the upside. Now, let's talk about our rules for a second. Should it pull back below 63? Let's start there. Should this stock pull below 63? It should. How much should it pull back below 63? We're going to get there, Matt, in a second. So why at least $1? And now based off of that, technically, yes. Okay, so $1 is not enough. Why is $1 not enough? Okay, the 4 prints. How often do we see 4 prints come into a stock like this? A burst of 4 prints. Now you have 64.50. So we've seen it twice, mythical beast, but it's rare. So we've actually seen it at 63 now, and we did see it at 64.50. So what I want to do is, when I'm managing a trade like this, especially with a personality of this, if I'm looking to short it from 65, because it pushes into 65, it doesn't hit, where's my price target going to be? Because we know it needs to go at least $2 underneath. So 64 is a little bit light. I'm going to go back to the original market maker. And this is really where this question comes into, is that during slower times. Now, slower times mean an overall personality. So when somebody says, there's, lower volume times in the lower volume trading, that's an overall market type personality. That doesn't mean the stock that we're specifically looking at is going to fall into that category. But we also do have to understand something. During slower times, do we have the leeway to make a bad trade, take a 60% trade, take a loss, and then expect to be able to make it back in the afternoon? Do we have that leeway? We don't. So what we have to do is we have to start to manage our trades in a way of, if this is my last trade, I'm going to be okay. So in this example, that from that 63 having to pull back, my price target's just going to be 63, because I know it needs to pull back underneath 63. But at the same time, because I can't expect another trade to happen, right now we're talking about it's almost 12:15. So 12:15, we're going into, those afternoon hours, and then we're going to get to a point where, we go into the afternoon where most of the time we've been silent for the past, for the, I want to say past couple of weeks, but it's probably past couple of months coming into there. But I want to start to manage my trades in smaller parts. And what I mean by smaller parts, the range is huge here. I have no problem going from 65 to 63. If my prints were at 62, what would my price target be? Now that is a lot of buying. Jesus. I would definitely mark this one down. Yeah, it's going to be 62. So I'm going to manage my trade just back to the market maker. I'm not going to be looking for full price targets because I can't ever go wrong being conservative. So on a trade like that, when the stock is, I just want it to come back to the prints. That's where I'm going to be at. As these controlling prints personality increase in the moment, do we change our quick build expectations? Well, yes and no. So that's an interesting question. Now, this is the most prints that we've seen at any type of level coming in at that 65, and its personality shows, but we haven't seen anything like that before. So now we have to take into account something. Okay, we have the 65 level, which we know is now a psychological level. We have the most prints we've ever seen come into the stock today at a level. If the stock was going to change its personality, when was that going to happen? Right this second. Okay, so I'm going to trade it right now as it's coming back down, and we're going to get that full pullback underneath 63. But what's in the back of my mind? What's still going to be in the back of my mind? Yeah, I still have to understand its personality has shown that it's not a huge pullback. So something like this, it scares a lot of people, but it actually, I love these type of stocks because you're talking about each time it's a quick trade, but we're talking about a $2 trade that comes into that. And I'm never going to be upset continuously making $2 on a stock coming in. So when people say, the personality has shown us day in and day, for the entire day up until this point, that it's not giving us those full pullbacks. It's more of, it's still following the rules, but it's more of an exception within the way that it's actually trading. I need to find something that's going to show me that it's completely different from everything that we've seen previously. And that's exactly what just happened here. Now, I'm still going to have my same price target. What's my price target going to be? 63. So managing, and this is one of the things that gets, a little bit in our heads, because where does it really need to go? So if we just shorted this right now, where does it actually need to go? Yeah, 61, 62, really 60 based off this amount of prints, guys, based off our print personnel and everything that we have, we really need to go back to 60. You're talking about a stock that's moved $10.25. I know it's a 50% move down, but overall, this is just absolutely gigantic. This right here screams out building, but it isn't saying it's the plan right now. So it still technically is, because remember, the controlling prints are telling us what needs to happen. Essentially, isn't it telling us that this stock needs to pull back a huge amount? Forget the riders for right now. We're just basing it off these controlling prints, what it just told us. Yeah, so it's telling us it needs a huge amount that's going to be coming back in. But this is my whole point, is that during these slower times, the best thing that we could do for our trading is manage our trades in a way more conservative way. Because if I'm sitting here right now and I'm not seeing any selling as we're coming into 63, even though the stock really should go back to about 60, is that a smart thing to hold on and let this thing come back on me? Right? That would just be nonsense, because we know 63. So during times like this, and again, when we say times like this, we're talking about a generalized personality. There's going to be stocks out there, especially cheaper stocks, that are just completely go against anything that the market is showing. That's why, if you notice, I don't talk about the SPY and the Dow and all that stuff that happens, because it really has no relevance to what the stock that I'm looking at that point, unless it does. And I know that sounds weird, but it is what it is. A cheaper stock's not going to follow the market the same way that an Apple's going to follow the market, or any type of those name brand stocks. So in this case, when we find the personality of the market itself is giving us less volume, giving us less pushes, we want to start to take those price targets, even though we have our calculated price target, knowing it's underneath that 63. Can we go wrong only going to 63? We can't. So that's my best advice for you. So I don't want to say it's not over managing. Okay, so it's not over managing, but your runners might get smaller in a case like this. When it gets down to 63, you're probably going to end up taking a large portion off. And it's because we know that level. We know the original market maker, the biggest market maker sitting right there. So we know it's going to be a hell of a hard time for it to really get past. We also know something else. Because it technically is an exception that's following the rules, is there any reason this stock does not bar up to 70 right now based off the amount of buying we have? Is there any reason that this stock can't just bar up to 70? It easily could. So that's how we need to start to manage. We have to look at both sides of the coin. We can't get stuck on the fact, well, it eventually needs to go under 63, because eventually is not what gets us money now. It's not what gives us realized gains. It's not what gets us as far away as quickly as possible from our entry. So we have to look at both sides of the coin here. Now, once from over 65 to that 63 level, so pretty damn close, but it's got a big range. But once we get to that 63 level, we have to understand something. It could easily go right back up, because this could have been the spot where they set their support level, and it just so easily can bar down to 60 right now. But do you see how different? I mean, there's a higher percentage chance that it's coming down, but it's not by much. It's about 60-40. So when something's 60-40, do you feel comfortable in it at this point? If I made you a bet and it was a 60-40 bet, how comfortable are you going to feel within that bet? Not really, right? There's a little bit more of a chance of it working out one way, but it's not. But this is this situation. So right now I have to understand that 63, that's not over managing getting out quicker because I know it should really go down to 60. That's not really over managing it. That's protecting myself. There's a difference. There's a difference between over managing a trade. For instance, when a stock needs to move $2. Anyone ever take 20 cents from it before? I know I've been there. We probably all have before. Okay, that's what over managing it is. But being more conservative based off of what the overall personality is showing us, that's not over management. And I feel like a lot of people kind of get caught in that, because right now, let's say, you shorted it, right over 65. Let's say it came down. Let's say, we're talking about $1.70, whatever the number is. That $1.70 is, and then getting out a large part of that position isn't as over managing, because we know we're sitting right at that 63 point. We know it needs to go underneath, but that expectation of that adds way more weight to what the trade actually has to do. You understand what I mean? So it's more, and right now the personality did not change, so we have to keep those same expectations, and that's it. Now, the only thing is that not the same expectations, because when you're at a 65 level, you get the largest amount of prints. If personality is going to change, it's right this second. And then we're going to look, as we talked about before, we're going to look for our reactions. We're going to look for some type of actual selling to come in. Now, why do I say that? Why do I say in this case I want actual selling to come in? Because remember, we don't always need selling for a pullback trade. It should be a significant pullback when it makes sense. And see, that's the thing, is that in this case, there should be selling that starts to come into here, because of what? We want our stories to match. Okay, it's almost like, when, two people get caught and they put them in separate rooms to see if their stories are, the same, or if they're lying about something. We want our stories to match. This pullback right here tells us what? And this is where we have to get controlling prints tell us everything that we need to interpret, and then we go from there. Riders on 65 need to make money, but see, that's the thing. Why do I want to see riders? And that's the thing. It's a true pullback, because the amount that this should pull back, there should be people shorting this stock. If I tell you a stock is 90% going to go from 65 to 60, are you going to short it? Of course. So in this case, I'm going to start off with that 63 as my spot, even though it needs to go below. And then if my stories don't match, I'm going to be ready to cover at all points. At any point, because this bar could just easily just right this second go straight up. It's got the buying for it. And we don't really have that great selling that's coming in. We have a little bit of selling, but not that great, that selling that shows us, okay, these are off level, that's going to come back underneath. So the management of our trade also has a lot to do with just the start of our trade. 65 showed us a huge pullback. But if there's a huge pullback, we have to go and think, are people going to make money on a huge pullback? If a stock's going to go down $5, are people going to make money on it? Have to assume so, right? So if I'm not getting my selling coming into there, what am I thinking right now as this stock starts to decrease in volume and kind of die a little bit? Where's my mind go? Shorter rule follower. It's like shorter fruition rules and long fruition rules. We have seen that with RVN, RBLK, Roku, BYND, World 2. And so that's the thing. I'm not looking for that huge pullback. Right now, in my exposure is the best way to put it. So the exposure that I have in this trade right now, I can't expect underneath 63 because they're just not showing it to me. So do our stories match up between 65, what it should do in comparison to the prints that it's showing us? Do these match up? They don't match up. And this is really inevitably, I'm answering your question right now. So if it doesn't match up and we're coming down to 63 right now, what do I have to do? So I don't have to reduce exposure yet because it hasn't told me anything. So if it doesn't tell me anything, what do I follow? If nothing new is telling me, I'm following my original game plan. I'm following the people no matter what, I'm still following the person at 65. There's no question here. So am I going to just reduce exposure for the hell of it? Because if you look, there's been more selling than anything else, right? There's literally been nothing but really selling that's came into the stock. So I'm not going to reduce exposure yet, but you damn well believe that I'm going to have an order sitting ready to reduce that exposure. And where's my order going to be? So let's say it's at 63. Where's my order going to be to reduce my exposure? This is just as important as understanding this whole thing. So 63.50. 63.24. So if the stock decides at 63 to go back up over 65, is 63.24 going to be enough? Nope. Is 63.50 going to be enough? Probably not. Yeah, well, I'm going to be pretty damn close to 64. Do you see what I mean? So if I'm going to be that close to 64 in a case like this, and it's coming down to 63, and I'm protecting myself, what should I do at 63? Even though it didn't show anything at 63, if my order needs to be all the way up here at 64, that's $1. I'm going to take some type of profit. I'm not going to take a lot, but at this point, I mean, again, it comes down to the prints. Okay, after our 65, look, there's one buy print. Everything else is selling. Okay, so this right here, but as we're coming down to that 63 level, I got to start to look. Okay, is it worth letting it go up $1 against me, losing $1 profit, or should I lock in 20% right now? And then if the prints start to show buying, then I can always lock in more. If I get that bar up, I'm already ready for it. But do you see how the managing of the trade really is based off what the trade is telling us? There's no real way to just say this is how you manage a trade, because each trade is going to be trading in a different way based off what its personality is, based off what its prints are, based off what its volume is, based off every variable that we talk about day in and day out. So here at 63, okay, I probably would have, even though it was sitting here just kind of messing around, there were no prints that said take off anything. But at the same time, I know if I have to take off quickly, it's going to be $1 up. So in that case, in this management case, I would have taken 20% off. And the reason being is because that if the stock pops up to take $1 away, I'd rather take $1 away on 80%. What's the most important characteristic of a successful trader? Cutting our losses. So in this case, having 80% and it continuing on its way down, okay, that's still 80% of the trade. No big deal. Now, if it was 100% and it popped up, it's a lot better to have to get out 80% with the dollar, the dollar pop up and giving away the dollar of the profit on the short side of things. Now, if we're coming down here and I see a ton of covering at 62, what am I going to do? We should try to keep that risk reward ratio. So if 65 to 63 is $2 and you can't control it to under 50, then take some profit to a certain extent, because you got to think 65 to 63, like you said, is $2. So if I know that if the stock goes against me, I'm losing $1 of its profit, okay, I'm going to take a little bit off. Just so if it does continue back up there, because I'm not worried about what I can make. What I can make is always going to happen. Okay, I'm worried about what I can lose. And I'm saying $1. Could this thing pop up $2? Could we go on a run to 160? And again, this is a specific stock, but we've seen it happen. So I'm just going to be very careful. And I'm going to manage it in that way. That guy at 65 thinks so too. And I agree with you 100%. I do think that guy at 65. But it was just, this is one of those cases where if you had shares, it was just so perfect because you come into the psychological level. It never pulled back from the 63, which had the second most burst. Then 64.50 came in with another 4 burst. Okay, so you have 2 bursts now. It was unheard of up until this point. Now we have 63 and 64.50. We come in at 65. I mean, was there any question here to anybody that this thing was going to change its personality? If you're going to be looking for something to happen all at once, these prints, you can't get better than that. So hypothetically, if we knew for a fact that we could cover at or under 63.50, there's not much of a reason to take profit as conservatively. So hypothetically, if we knew for a fact we could cover or at or under 63.50, there's not much of a reason to take profit as conservatively. So I mean, I'm not sure what you mean by that, because coming into 63 right here, chasing the scenario, because here we don't know and cover order would be near. So it would be near 64 as it's coming down to 63 for a bar coming back up. For instance, we see this right here. What does this tell us? This bar right there. So even as this bar just came in, it's telling us that it's unsustainable and that we really should be watching out for something to come higher. Now the story needs to match up. Do we have the prints to match it up? Well, 61.90 right here is telling us that we don't have a lot more room towards that downside. Coming back in, I think you're taking it a little bit too, not advanced, but you're making it a lot more complicated than it actually is. Okay, we see that at 65, as we come back down, we know 63 is the spot. So as we're sitting here not really doing much, the worst thing for a stock like this that could ever happen to a trader, okay, and remember, I'm telling you how to manage this specific stock. Depending on if we had a stock that's managed, for instance, Sophie, I'll use for today. Is Sophie going to burn me? Sophie going to burn me? Probably not. Could it? Of course it could. Anything could happen. But the chances of it burning me are very, very, basically slim to none. So in a case like this, if it was the same deal, well, let's say we were up at 15, okay, and it needed to come down to, 14, I'm going to look at this completely different. I'm not going to take something off just to take something off, because I know that if it goes against me to the upside, I'll be able to cut it in about 20 cents, give or take, somewhere in that area. And that's on one of its best its best bars. It would have to be pretty much the best bar of the day for that to happen. Okay, but then I come back to DWAC and I look at something like this. I know that this thing can burn the hell out of me. So I'm going to look at it completely different. When I come down to the 63, I'm going to lock in a little bit in comparison, because this could literally go to 100 right this second. So I have to manage it differently than I would manage a stock that I'm not really that worried about. Does anyone have any questions? Does everyone see what I mean? So when it comes down to it, overall personality definitely has a lot to do with the way that we're going to manage a stock, the overall personality of the market itself. But what it really comes down to is the stock and the way that stock is trading. Because, especially you're talking about on average moves $8.80. Today, the average volume is going to be way higher than it's been, by the time that we get to the end of the day. So when I look at a stock like this, it's completely different. Is DWAC going to follow the market? It easily could be it's set up perfectly for a measured move, Matt. It absolutely could. Now, this is going to follow the market, so I have to manage this stock a lot differently. Okay, just like when we brought up Sophie. Sophie, I'm going to have to manage a lot differently as well. But there's a difference between over managing and managing a stock with what it actually tells you. Over managing essentially comes from fear for the most part. Most of the time that someone's over managing a stock, it's because of the fact that they're afraid that it's going to go against them. Okay, they're up a few cents, so let's even call it, just get a great bar down or whatever it is. But when you start to over manage a stock, it's because you're not following what the stock is telling you. Okay, when we saw these prints at 65, guys, and it's not gonna let me go back, but those prints that you saw before at 65, what price did that tell me? How much were we pulling back to? So 60 is where it should pull back to, but our price target, again, 63. Because taking $2 out of it, and when I say taking $2 out of it, will we get out of everything at 63 just because 63 is there? Of course not. We would have limited some exposure right above just because it was getting stuck in this consolidation and volume started to die. The biggest thing when you have a stock with really thin orders, if you have a big volume bar come in, it could be devastating. It could also be great, depending on which side of the coin that you're on. But I don't want you, especially on a stock like DWAC, I don't want you to think you're over managing. What you're doing is you're just setting better, more conservative price targets that are allowing you to lock in certain things to not get caught up in in the whirlwind of when it makes a bar like this. Okay, or it gives you 2 minutes, it's down $4. And again, in comparison to a stock like Sophie, I'm not too worried. So I'm going to hold a lot more of a percentage of a position like this, because it's just, what's the worst that's going to happen? I mean, if you look at the best bar of the day, it was less than 20 cents. So what's the worst that could happen? You see what I mean? So it's going to be based off of what's going on out there. Essentially, how easy it is to become an unmanageable trade. All right, guys, any questions? Of course we do, Dave. Now, I don't think I looked before. Does anyone have shares of DWAC? Because I don't. But I mean, this would have been, I mean, it just doesn't get better than that. And you got to, there's a second lesson that came into this, because we always, I get questions about exceptions all the time. Does everyone see how this became, it turned into, so yes, it was giving us quick pullbacks. Its personality showed one thing, but what prints would look like to change that completely? This was a lesson within itself. because we see the stocks pushing up to 65. We see what's going on there. And then we know that it doesn't really pull back much. So one person might say, okay, well, I'm not expecting it to pull back a whole bunch, and then I'm going to be looking for a trigger back towards the upside. But if you really think about it, okay, in no way whatsoever did this show us that it was going to continue on with its personality, because we're at a psych level. We got a huge amount of print, okay, and we didn't really get any type of buying. Got a little bit of selling, but you got to remember something too. Okay, if somebody's going to take a position to sell on this, is it going to look like it's huge on our filtered time and sales? Are we going to see this huge amount of burst coming in on the sell side of things? Of course not. It's just not how it prints. It's not what its print personality is. But when you see print here, 2 prints here, print there, 2 prints there, but there's no buying, that leans us towards where the stock actually needs to go. So that's a perfect example of what a stock that has showing the same personality all day long, what it looks like to change it. You couldn't get a better example. You have Sykes level at 65, and you have a huge amount of prints in comparison to everything that we've seen going on throughout the entire day. Something to think about, especially when you're looking for a stock that's just not pulling back and you're looking for that short trade. If there are shares, that's what it needs to look like.